Hey everyone, welcome to a quick weekend video. I wanted to talk about the new price target from ARK Invest and Cathy Wood for Tesla. They are targeting Tesla to reach $3,000 by 2025. And this is very exciting and it's got a lot of people talking. There are a lot of positive as well as negative comments around this price target. And I quickly wanted to get into what I think about this. Now, personally, I'm very excited that ARK Invest is taking a very bullish position on Tesla. I totally get the fundamental argument that Tesla has a very high PE and the company has it's not profitable to warrant that sort of a PE. But honestly, Tesla cannot really be valued as a traditional car manufacturer. I drive a Tesla, so I'm very familiar with what the car offers, and the experience is just so different. While I think ARK Invest is maybe a little too optimistic, but I think a lot of that is warranted because of the potential that Tesla has. Now, obviously, past performance may always not translate into future performance, so keep that in mind as we go through the video. So, ARK Invest is absolutely one of my absolute favorite ETFs that's out there, and this is the reason why. Um, Call it what you will, but over the since its inception, it's returned a pretty phenomenal. It's got a pretty phenomenal return, and the rate of return is quite amazing. So this ends up being like this is a really good ETF to hold long term, especially in like bullish markets and when the world is being changed with so much innovation that's happening on a very frequent basis. This is the ETF to hold. Um, the other option is the other reason is in today's day and age where passive investing has become so popular and there are so many assets that are tied to the world benchmarks. This is very refreshing because this actually takes money out of some of those more passively managed ETFs that typically are weighted towards companies that are higher in market cap and not really innovating the way you would want them to. Instead, this focus on those high innovative names that the passive investing may not really favor. But then when there's a breakthrough, that's where the company really gets a lot of attention, and your investments suddenly start growing in value. So while some people claim price discovery is dead, but this is a very attractive option to get to some of those price discovery type names that are out there. Top 10 holdings as of Friday, again, it's a little bit tech heavy, which is fine with me because I still think there's a good way for tech to grow. Again, I know there are a lot of people who will argue that, but that's my perspective and my opinion. And I think there's still a lot of room for tech to run. And I'm not talking to what it'll do next week or the week after, but I'm really looking at like a 2025 type time frame to see the potential that's out there. But key names other than Tesla are mostly tech heavy. Square Inc., Teledoc, which probably borders that tech as well as maybe getting into some of the healthcare space. Roku, again, a pure tech name. Baidu, exposure to China. Zillow, like a real estate plus tech. So a lot of names I really want to own long term, and I'm very happy with like their top 10 positions the way it is. CRISPR is also one of my favorite names. Now it's down to number 9. I do remember last year Editas and Invitae were pretty much high up there in the ARKK. Now they've been pushed back, which is fine. Biotech has generally not performed very well this year. I think it's probably down. Some of those names are down about 15 to 25%. So that's probably like the lower rating they're getting. Maybe the conviction is fairly lower on those names for ARK Invest. But this is another way to get also exposure to some of those hot assets like Bitcoin. So Square and Tesla both have a nice Bitcoin holding on their balance sheet. So if you want to have that exposure to Bitcoin without really worrying about buying Bitcoin, managing your wallet, or not knowing or worrying about the frequent price fluctuation, this is a good way to have that exposure and sort of reduce your risk. Um, The other reason why I absolutely love this ETF is it's marginable, so and it's treated as a low volatility marginable asset. So most brokers will allow you the maximum borrowing capacity against the assets in this ETF. So let's say you have about $100, you might be able to go up to $50 in margin, so you can borrow against this ETF to pay off your expenses and still keep this still hold on to the shares of the underlying ETF. Now, if you were to do that separately for Tesla or Square, you might not be able to margin it as easily because they're considered to be more volatile names which have higher margin requirements. So really, this is taking a basket of these high volatility, very innovative names, and then translating that basket into what could just be treated as a regular normal ETF or a share, which are much easier to manage from a day-to-day operations perspective. The ETF typically also has a dividend payout towards end of the year, which is something I like as opposed to a quarterly dividend because it's just one record that I need to keep, and I'm fine just getting that dividend end of the year. I'm also happy if they stop the practice of paying the dividend, but it's a good way to to incent more people to buy into the ETF, and that dividend usually works out to about 3%, which is more than what SPY or QQQ offers today. So it's a very attractive ETF to own, just other than the fact that they've been phenomenal in the market performance. So over the course of the year, I anticipate adding more to this ETF. This is one of my personal high conviction names. So when there is a big dip like we've had over the last month, I have used that opportunity to add on to ARKK. I own both shares and calls in ARKK, so I do look for the days when there is a big dip in some of these names. And I trade around this position too. So I do close out some of those buys that have gone up by 10-20%. And then when the shares tend to fall, then I would reload up. So I basically trade around a core position in the ARKK, which is working out pretty well for me right now. Um, and the last piece I really wanted to touch upon is the benefit of having ARKK is that they actually trade around their core positions. Being an actively managed ETF, you do get the benefit of having ARKK manage some of those profits, take some of those gains, manage their losses, get into some of these more high conviction names, get off when the market is doing really well or in periods of low volatility into more liquid names so that you can take advantage of inflation. So there's a lot of benefits in having that macro exposure as well as micro exposure, which is why this ETF is just phenomenal and it's still only getting started. So highly recommend you checking this ETF out. It's a great way to really like it does have a weighting, should have a weighting in your portfolio. You can check out how I use this on a daily basis. I do post videos when I make any major trades. And hopefully this gives you some more information on what I think. Absolutely thrilled with they're doubling down on Tesla and they're being so bullish on Tesla. And I'm only waiting to see what else is in store for them in the future. So good luck next week, and I will see you in the next video.